All right, so I recorded a trade recap knowing that I had it in full screen the whole time, bro, and I didn't change it. I'm gonna show you guys what happened today. I basically lost $1,000 or 2% on a Lucid funded account, and here is the trades right here on this Lucid funded account right here. Trading on Trade of 8. The main reason why I lost this was, again, I was trading this like it wasn't an account. I was trading it like it was a demo account basically, even though it is, but I spent money on this account, so I need to value it. I need to enforce good habits by trading my system, trading my models, and being patient for my entry model. Today, I was just gambling. That's what I was doing. I was unable to accept the risk. I was unable to find a ideal entry and ideal trading, model to have good stop loss placement, have good trade management, and I was just trading all over the place here. So today was just one of my worst days trading this week, and of course, it was on Eval. I was not trading on the funded. I don't know. I just wasn't really in the right headspace to be trading today. So I just believe, I should have walked away instead of even trading on demo or on an eval. Like I think I just should have walked away. Now we're down 2% or $8,000, and we're closer to blowing the account than as to passing. But either way, when you're in drawdown and if you have a system that's profitable and you know what you're doing, I promise you'll be able to make the money back and much, much more. So let's go over here where I was going over the best trades and the bias for the best trades. So I'm gonna make this quick because I have to go to work. And here is one of the confluences on the weekly time frame. We have swept the weekly candle range high on the 4-hour time frame. I was marking this in the Discord. I have a 4-hour bullish BPR here and this intermediate term low that the market is aiming for, to go and sweep that sell side. And once that sell side is swept, you want to see a strong rejection in the market pushing up higher, which eventually did happen on the 1-hour time frame. You can see we had these internal sweeps also of these candle ranges, but we also had this bearish BPR to give us that continuation push lower past this low, and of course reaching past that little low, watch, I will show you, and of course past this one. This one was also a very, very important target that I was watching. But then eventually on the 5-minute time frame, I was marking out these entries. So if you go time frame alignment, 1 hour to 5 minute, 5 minute here also had this 5-minute change in the state of delivery once you formed that little sweep, and you also had SMT at this high right here, I believe with NQ, or I mean ES. But then eventually, once the market formed that form of SMT, the market pushed down, formed that change in state of delivery. That would have been the best entry, and my entry was nowhere near that. I was over here gambling. So if we go to the 5-minute time frame, as you can see here, I was basically just gambling. I was gambling. I was buying, selling, moving stop loss to break even too soon, unable to accept the risk. And if I did, the market would have plummeted way, way lower. And this is why it's so important to pay attention to the higher time frame. What I mean by this right here is you see so many people caught up and taking entries on the lower time frame, but in majority of the time, you need that higher time frame confirmation and that narrative to get you to the lower time frame. I don't understand why people just show the lower time frame executions. Maybe it's marketing, maybe it's just the way to grab your attention because you'll have low attention spans. Not everybody, but majority of the people, and maybe it's the clicky flash bait, but majority of the time they're spending majority of their time on the higher time frame, like the 15-minute time frame and higher. So you can see here we had that 5-minute change in state of delivery to then push us down lower, and also you can see here we had after that internal sweep on the 1 hour, and after sweeping liquidity and being inside of that 4-hour BPR, we had a 5-minute inversion fair value gap form. Maybe you want to take that entry, have stop loss at this low since it formed a new fair value gap inside the inversion, which the market could have retraced up into to then push down and push up higher after redelivering into it. And then, 1-to-1, nice, clean objective, 60-point stop with a 79 point or an 80-point take profit. This one was a little bit more of a risky trade since this one was a mitigation block continuation off the fair value gap. The market pushed down lower, respected this mitigation or this order block, and then eventually formed this form of mitigation. No change in the state of delivery here yet, but once this did form, the market had strong continuation up higher with a 29 or 30-point stop loss for a 75-point take profit. And again, these tight stop loss and these changes in state of delivery or order block entries, mitigation block entries are very, very powerful because again, you have a very tight stop. You have the stop loss at the low or at the high. You have to mark the order block, but it's very, very keen. So yeah, these were the best trades for today, and that's basically my trade recap today. I just, again, was gambling, was not taking the market seriously or this account seriously, and I got punished. So again, guys, you have to be very, very vigilant, promote good habits, show up every day, be consistent, and just treat this like a business. You cannot treat it like a game. And today I treated it like a game and I got punished. So I'm going to reset. I'm going to reflect. I'm going to go into the next couple of days, really thinking about what I got to do, what type of mindset I got to approach myself in for the rest of the year and the rest of the month. Because again, this year I really want to take over and I want to be the best trader I can possibly be. So that's pretty much really it. So yeah, peace.